It's a big deal when a big bank makes a bullish forecast for gold and silver because they know that they can't stop it. I'll explain why and how as we explore. That's right, another revision from a huge bank on gold and silver prices. And by the way, I've already recorded the video of my revised price predictions for gold and silver. Stay tuned for that. It's kind of intriguing. Once you see that video, you'll see why this video is even more important. So nonetheless, UBS is the bank we're talking about here, and they've raised their forecast yet again. I think this is their third time as well, flagging strong momentum from investor demand, macroeconomic uncertainty, and persistent fiscal and geopolitical pressures. Indeed, that is the case. And I tell you, I think they're going to go up. But of course, no one truly knows exactly what's going to happen with gold and silver. But nonetheless, my friends at Summit Metals are there for you, whether the prices are low or high, whether you want to buy or sell. They're your place to go. Check them out in the link in the description below to check out Summit Metals. Now, the bank now expects gold to reach $4,200 an ounce across all time frames, up from its prior view of $3,800 by the end of 2025 and $3,900 by mid-2026. Silver forecasts were also lifted to $52 and $55 an ounce, compared with previous targets of $44 and $47. Now, they're talking about the time frames from within the year from now until mid-2026. My revisions are till the end of this year. But UBS strategist said that the revisions reflect expectations of stronger central bank and exchange-traded fund demand alongside ongoing support from declining real rates and fiscal imbalances. Indeed, all that stuff is still there. Here in the United States, we have a fairly strong GDP, but that does not really tell the whole story with regards to what's going on in the economy right now. There's a shakeup in our economy. I think most would agree that that is at least what's going on, causing some uncertainty. And that uncertainty is part of what is driving precious metal prices. Now, the strategist pointed out that silver's greater room to overshoot given its higher volatility, adding that their forecast remains skewed to the upside. Both metals have surged this year, with gold hitting record highs in real and nominal terms, and silver reaching levels last seen in 2011, a 14-year high. And by the way, as was pointed out by a member of the community in my live stream, silver technically did not actually get to $50 an ounce in 1980 and 2011. It was just shy of it, but still close enough for government work for sure. But nonetheless, at this time, they think that silver will surpass that $50 mark. Precious metals have outperformed again, with gold reaching new all-time highs and silver hitting its highest level since 2011, up over 25% quarter to date and 60% year to date, according to strategists led by Dominic Schneider. The team said macro, political, and fiscal dynamics should continue to support demand for safe haven assets, allowing the current fear of missing out mood to persist. UBS also expects the gold to silver ratio to move towards 76. That's right. That means there's an opportunity there for silver. Now, for most of us, 76 still seems very high for this metal compared to gold, and it should be much narrower than that. In fact, the intriguing thing is that in 1980, that ratio was about 16 to 1. In 2011, it was about 33 to 1. And here we're seeing record high gold prices when adjusted for inflation, and silver nearing $50 an ounce, and it is still above 80. But underlying drivers include the Federal Reserve's return to rate cuts, a weaker U.S. dollar, and fiscal deficits in major economies such as the U.S. and France. UBS sees these factors as unlikely to be resolved soon, keeping the backdrop favorable for real assets. Central banks are expected to buy 90 or 900 to 950 metric tons of gold just this year, just shy of last year's record, with private investors also increasing allocations as a hedge against U.S. Treasuries exposure. And I agree with that. I think we're going to see more buying. Even if they stop buying, I think gold would still kind of stay right around where it is, if not increase a little bit more. While gold and silver lead, the UBS remains more cautious on platinum and palladium, which are still closely tied to industrial demand. Their platinum forecast is to 1350 an ounce, up from 1200, but said that the metal still implies lower prices ahead. In other words, they think it's going to fall. And so we'll see. Palladium remains weighted down by its reliance on auto sector demand. So it's fascinating. That's interesting that they have a bearish account for platinum and palladium, but bullish for gold and silver. Now, I believe gold and silver will also continue to rise, but you think about what's going on in the world today, nothing's slowing down in terms of those drivers for gold and silver. And silver has a dual-edged sword. On the one hand, it will follow along with gold for the reasons why gold is going up, even though central banks really don't technically hold it in their possession in vaults, although Russia has been accumulating it as a nation as a strategic metal, but I don't know that their central bank is actually holding it in vaults, whereas Saudi Arabia is buying ETFs, not the same as actually buying physical silver. And nonetheless, all of what's going on, especially around the world and in China with disrupting the market as well, is going to be intriguing to see. China is on holiday right now, but some of what I reported on earlier happened before that holiday hit. A major ETF shut down the new trades because they want to be able to get caught up, because there's a 30-day wait for silver, what's called raw silver. These are 15-kilogram bars. Don't have any of those on hand to show you, sorry, but one thing is for sure, silver is a hot commodity right now, and it's pretty amazing to see it move in this direction. And although we will see some consolidation, some pullback to some degree, I think it's going to continue to move forward. So I don't know, you'll see in my video whether or not I agree with these targets that UBS puts out. Now, the other aspect with a target and a forecasting from central banks is some people feel that they alone are manipulative factors, maybe even suppressive factors for gold and silver. In other words, they get your hopes up so that whenever you go to buy and then it falls, well, you are disillusioned, you are jaded, you are disappointed, and so the wind goes out of your sails and you sell out of frustration and panic. Don't do that. Do not sell out of fear, just as you should not buy out of fear. Hold on tightly to your silver with those diamond fists. That's what we need to do. We need to have our diamond fist as we hold on and continue to press on with our silver and our gold as well. It's been an amazing ride, and if you've been stacking for any amount of time, well, you know that we're in a pretty good cycle here with silver and gold, and that will likely continue. But even if it does fall in terms of its price, it still does. The metrics have remained the same. The fundamentals are there overall for what the metals do over the long course of time. If something were to change in the system or in the economy or with central banking, that could cause the prices to fall, which could happen. Remember, every kind of bull run, much like what we're seeing now with these constant moves up, there's going to be periods of consolidation. And so far, what we have been seeing was some of the little bit of a smackdowns that we've been seeing. I can think of 2 times now where it's happened. It literally lasted a day or two, and then they were off to the races yet again. And I think that's part and parcel as to why UBS is making their revised prediction as to where the metals are going to go. But I will continue to watch the markets. It's what I do on this channel, is to bring you the latest news, analysis, and insights in the world of precious metals. So if you enjoy what I do here, I hope you will consider subscribing to the channel and press that notification bell so that you can be apprised of the latest video that makes its way across your device. And so that's what we do. And so I'm going to continue to press on. Now, are you still buying gold and silver even at these prices? I am, but I'm kind of holding back to some extent. It's tough to make a purchase. Some of the larger purchases with gold at 1 ounce sizes now, it's very, very tough. But it is what it is. That's the world we live in these days. So fractional gold seems to be kind of where it is. And so far, I've made a purchase from a fractional gold from Summit Metals recently. And you can too, if you check out their website. Link in the description below. So that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.